What's up, Alex? It's Guys here, and I know you've been taking investing seriously. You've done your research, you've made a plan, and maybe you've even bought a property or two. You want to reach financial freedom, right? You want the freedom to be able to make the choice to work if you want to, or never work again. You want to set your family up for the following generations to come. All this through investing in real estate, collecting passive income, while all of your assets appreciate. Well, you're on the right path. You see, I started investing in real estate just a few short years ago. Before that, I had my own business and I played around in the stock market a little bit. But when I found real estate, it was a godsend. It is the one investment that I know to bring success no matter what. 90% of the world's millionaires got there by owning real estate. I knew this and I wanted to be a part of that 90%, so I dove head first into real estate. You wouldn't be here today if you didn't want to be a part of that 90% as well, and I know that you're doing the exact same thing. So today, I want to tell you just how much money I make and just how much money you could make off of buying rental properties. These are the first 5 rental property investments that I made. Listen, I'm not doing this to brag or to flaunt big numbers. I'm doing this to try and teach you and show you exactly what all the possibilities of investing in good real estate deals can bring you. Take notes today, my friends. You do not want to miss out on these steps that'll teach you how to get the financial freedom that you deserve. Real quick, before we dive into my portfolio, can you do me a solid and just hit that like button for the YouTube algorithm? It means a lot and I appreciate it. Let's get started. Alright, so the first property I bought was in late 2018. Up to this point, Matt and I had been investing in stocks together, separately, but talking business, talking stocks. I had about $40,000 saved up at this point, and it was really irritating Matt because I was convinced that I would use this and strategically place it in the right investment that came, along the lines later down the road. It bothered Matt because I had 40 grand just sitting in my bank account while we were investing in stocks, and he would consistently tell me, Alex, you got to invest in real estate. It's not going to do anything. Just sit in your bank account. Invest in real estate, invest in real estate, invest in real estate. Well, we finally did. He approached me one day and said, hey, I've got this really good deal under contract in Austin. Do you want to buy it with me? I got it from a wholesaler. The purchase price is about $109,000. We'll split it 50-50 and just come and invest in your first real estate property with me. All right, so $109,000, amazing deal, even back in 2018. This was located in Brushy Creek, which is a really nice neighborhood in Austin. It's a little further north, near Round Rock, where we were born and raised. But, I was a little bit apprehensive because this was going to be about $25,000 or so that we would each need to put down. And, I had this 40 grand saved up in my bank account and was not too eager to just see it disappear into this real estate investment. So naturally, just like everybody does before they buy their first real estate deal, I was apprehensive and I would say, well, what about, its condition? Like, are we going to have to do this? How's the roof? How's the foundation? What type of tenants are we going to get in there? How much are we going to be able to get for rent? All these questions that I would ask myself that I never ask myself now to stop myself from buying a really good deal. I started asking these questions and trying to pick it apart, and maybe this isn't the right one. All these things to discourage me from investing in the deal. Anyways, I put the fear aside and I decided to buy it with Matt. Now, we got this from a wholesaler. It was brought to us, $109,000. Amazing deal. It was a 3-1, less than 1,000 square feet in an amazing neighborhood. So we put it into escrow. Matt started the process of reaching out to the hard money lenders to get us a loan. And when we were in title found a lien come up on the property of $30,000. So this $30,000 had to be added to the purchase price to be able to close on the deal because the seller did not want to decrease the price by 30 grand, nor could he to pay off his previous loans. So now, purchase price just went up 30 grand. I asked Matt, hey, how can we get this down so that we're not having to pay for it ourselves? Can we get the seller to pay for some? Can we get the wholesaler to pay for some? Matt did some negotiations and ended up getting the wholesaler to pay 2 grand and he got the seller to pay 2 grand. So now our purchase price is $135,000. Still an amazing deal. We closed on the property with hard money. We had to put about $56,000 down to pay the wholesale fee and the extra lien that came up in title. But we secured the property, got it for $135,000, and we had a tenant in there day one. The moment we closed, we got a tenant in there. Didn't have to do any repairs to it at all, but we had a tenant in there paying rent, which was great. So the mortgage, due to it being an interest-only hard money loan, we weren't escrowing taxes, we weren't escrowing insurance, but the mortgage alone for the interest payments was somewhere around $750, and we had it rented out for $950. Now, one of my biggest lessons learned with this first deal was the fact that not every property cash flows, especially when you don't do any work to it on the front end. We threw a tenant in there day one, we had done 0 repairs, we did no make ready, we did nothing to it. So that first year there were a lot of stuff that came up via maintenance, like bathtubs, AC, water heater, this, that, and the other came up, and so we ended up paying a lot of maintenance fees that first month via our property manager. That's okay though, because we bought it at such a good deal. 9 months later, we did a cash out refinance. We got our entire down payment back, so about $55,000. We're about $1,000 short. We got it back, and now we were into this property for no money. We had infinite returns due to the fact that we had taken all of our cash out. We had our tenant in there paying the taxes, the insurance, the mortgage, and here we are about 2.5 years later. That property just got appraised for $358,000. We did another cash out refinance and pulled more money out of the equity that has appreciated within this home. So this deal, even though it didn't cash flow that first year, and even though we probably about broke even that second year, we've been able to take out a bunch of equity and get more money than we ever could have if it just cash flowed $100 per year. Our new mortgage after the second cash out refinance, we secured a pretty good loan. We got a 3.75% interest rate, and our mortgage is around $900 a month, and that is with taxes and with insurance and the mortgage payment. It's currently being rented out at about $1,300 a month, so we're collecting some cash flow. And really, they say that money trees don't exist, but when you're in a property for nothing and the property continues to appreciate, it's kind of a money tree. It's free money that we will be able to access if we want to as the years follow on down the road that we continue to own it via cash out refinance. Property number 2. So you remember in that first property when I said 9 months after we purchased it, we did a cash out refinance? Well, we took that cash out refinance and we bought another property in September of 2019 for $242,000. Since we used the cash from the first purchase in the cash out refi, we're kind of in this again with, no money. We just took it out of here, put it in here, and that first down payment has now allowed us to buy 2 properties. We got this property under contract at $250,000, did some negotiations, got it down to $242,000. Our initial plan with it was to partner with a contractor and flip it, but Matt and I decided to keep it, and I actually used it as a sober living house and rented it out for a couple of years. We bought that one again with a hard money loan. The down payment was approximately $25,000 or so. Our mortgage payment of interest-only payments was about $1,786 a month. Now, I was renting it out from us for $2,500 a month with taxes and insurance. That about allowed us to break even. We didn't get any maintenance requests because I was renting it out. We didn't get any maintenance requests because I was renting it out, and I allowed my sober living business to handle all of the maintenance that the property needed. We bought it for $242,000. About a year and a half later, we did a cash out refinance on that one, and it got appraised for $353,000. That was in January of this year, 2021, and now the property is actually worth probably about $500,000. Since September 2019 to October 1st of 2021, we have had that property appreciate about 2 times. So it's worth double what we bought it for. And we're currently renting it out for about $2,500 a month to a regular tenant, and we're utilizing a property manager to oversee all those operations. This was our first property that we bought in Austin, Texas, and this was in an up-and-coming neighborhood. And so one thing that I really learned with this purchase is to buy good real estate in up-and-coming neighborhoods. This property, was probably not our best choice if we were to keep it and try and rent it out to a regular tenant at that time. But we were able to get creative, and I rented it out from, for my sober living house, which allowed us to at least break even to be able to keep it. And I think this is one of the best investments we've made so far. It's in a really hot zip code, 78723. It's a really great property, and we'll never sell it. Now, moving on to property number 3. Things are heating up with real estate investing with Matt and I, and we're at the end of 2019. We had just bought that single family home, property number 2, and we were on the search. Things were picking up for us. We were getting more deals sent our way, and we found this 8-plex via a wholesaler in New Braunfels. New Braunfels is a little bit south of Austin, but it's a great area. It's a great market. It's between San Marcos and San Antonio on I-35. Now, we found an 8-plex, and the purchase price they wanted was about $535,000. But Matt was able to negotiate it down from $535,000 to $515,000, but we had to close pretty quickly to get the deal done. So we were kind of in a scramble. We were viewing properties that day. We had just viewed a triplex in Bartlett, Texas, which is property number 4. We'll get to it in a second. And we were on our way to go view the property in New Braunfels. We're driving down I-35. It's Austin traffic, is stop and go. And we're talking to the wholesaler, and he's saying, hey, look, guys, we've got 20 investors that are about to show up here in an hour and walk the property. Do you want it or not? We're sitting on I-35 and stop and go traffic in Austin. It'd probably take us about an hour to get through all this traffic and get to New Braunfels. And Matt just looked at me and he said, do you want to buy it? And I said, I trust you, let's go. And so he told the wholesaler, hey, we'll take it. We hadn't even viewed it, but we signed the contract, sent the wire, and tied the property up. So the reason that we felt so good about it is because in Austin, it was really hard to buy a duplex for less than about $350,000. So it's about $175 per door in Austin. And it was pretty similar in New Braunfels. A duplex was going to cost about $280 to $320. So it's going to be about $140,000 per door when you're just buying a duplex. Triplexes and quadplexes about the same. Here we had an 8plex that was about $75,000 per door, and it was going to meet our 1% rule. Bought it for $515. It was already bringing in $5,800 a month in gross rents. So this was a big one for us. We didn't have all that much cash, and we needed to bring on a partner to be able to help with the down payment. So we reached out to our friend Clyde and asked him if he wanted to invest in real estate with us. He had been reaching out to us previously saying, hey, if you guys find something, let me know. And Clyde jumped on the opportunity, and we ended up buying this 1/3, 1/3, 1/3 each. The down payment was about $120,000, and we got the remaining of it financed, and we utilized a hard money loan. So the mortgage payment on this one was going to be about $3,300 a month. That's interest only payments. And some of the things that I learned with this investment were, number one, if you see a good opportunity, you need to jump on it. Had we not pulled the trigger right then and there while we were sitting in traffic on our way to go view it, we may have lost the deal. We pulled the trigger, we secured the deal, and it has been an amazing property for us so far. The following day, I went to go view the property, and it wasn't in bad shape. I was able to talk to some tenants. We scheduled with the wholesaler. They said that they would allow us to come in as an inspector, just talk to the tenants if they were there. So we went in, we talked to some tenants, I viewed some units, and the property wasn't in bad shape. It wasn't in the greatest. It's an 8plex, and it's on a street full of 8plexes, so it's not the nicest neighborhood, but it is in a good location, and it is up and coming. Now, it was bringing in $5,800 a month, and as tenants have moved out over the years, we've updated the units and we've raised the rents. When we bought it, they were at about $650 to $700 or so, and now we've got them all the way up to about $950 per door. Since we bought the property, we have done a cash out refinance on that one too. We didn't pull that much out. The lender that we utilized only allowed us to recoup up to what we paid for it. So we didn't pull that much money out. However, the property has been doing really, really well, and it's valued at about $850 to $900 right now. And we bought it at $515 in early January 2020. All right, property number 4 was 10 days later after the 8plex. This was a triplex that I found on the MLS. I was making a lot of offers. Back then, Matt and I were each making probably anywhere from 30 to 50 offers a day for properties that were listed on the market. This one was located in Bartlett, Texas, which is a little bit northeast of Round Rock. It's east of Georgetown, east of Jarrell, on the east side of I-35. Bartlett has a population of about 1,200 people, and if you look it up on Google, it actually says that it's a ghost town. This was a little, concerning for us, and we were a little bit apprehensive of the population and the market and what we were going to be able to do with the property if we were going to have demand for renters. But it's actually been really great. It was built in 2019. We bought it in January 2020, and we actually paid less than what the builder had paid to build it. It started out at about $320,000 asking price. It was rented out for approximately $3,300 a month, which was great. Brand new, no issues with it. Then I made an offer at like $275. They accepted. We were in an option period, and we negotiated down to $250. They accepted. and then we negotiated it down to $225. So we ended up buying this triplex for $225, which was less than the builder actually paid to build it. So they had it listed on the MLS at $320,000, and we negotiated it down to $225. Now, we brought Clyde in on this one again because we were a little strapped for cash, just like in property number 3. So Clyde, Matt, and I, we ended up buying this triplex, and it already had the tenants in there, and we brought Matt's property management company to come in and manage it for us. We're not exactly sure why the builder was willing to sell for that price. I think he needed the cash to go and build another property somewhere, and he just wanted to break even or slightly lose a little bit of money on this one. So we were the guys for the job, and we bought it, and the property's been great. It's remained rented out the whole time. There's a little problems with COVID. One of the tenants wasn't paying rent for a while, but she's since now been on track, and she's been making extra payments to get caught up. But the property's been good. Probably 0 maintenance requests except for that Texas February freeze. Our water heater froze and it was ruined at that property, so we had to go get another water heater, but it wasn't that big of a deal. The property has cash flowed about $1,000 a month for us ever since we bought it. Property number 5. January of 2020 was getting crazy. We had another property that we ended up buying. This was a single family home in a great neighborhood in Round Rock, and it was actually brought to us by a wholesaler who is now our partner for our wholesale company. Dorian, she got this under contract at about $115,000. She assigned it to us at $150,000. This was a really good deal. It's hard to find Round Rock real estate at those prices even then in early 2020. So we bought the deal. We used a hard money loan. We had to put about $20,000 down, and we already had it rented out. So we rented it out to the previous owner who ended up selling it, and she's been good so far. She's paid rent on time every time, and it has cash flowed for us. We bought it 2021 in January for $150,000. Since then, we recently got it appraised, and it is worth $325,000. So it has doubled in value since we bought it about 18 months ago, and it's been doing great for us since. So in the span of about 4 months, we went from 1 property to 14 doors. This was pretty crazy, and it was stretched me pretty thin. However, this was the best choice, and these were amazing investments that have set us up now 18 months later to do many more things. This was all moving very fast, and I was not prepared to buy that many properties going out, but these were a lot of opportunities that came up, and it really made me nervous. It really stretched me pretty thin, and I actually had to borrow money from Matt to be able to buy all these properties. So I was paying him interest payments, and then I paid him off a few months later, but he was willing to help me out there, or otherwise I was just gonna say, hey, I actually didn't want the loan from him, but he made me take it. I kept telling him, no, I don't want to buy it. I can't buy it. I can't buy it. And he said, here, I'll cover you. Just get me back later. And it was the best decision that I ever made, because those properties have done a lot for us. They've provided a lot of equity, cash out refinances, great tenants, good cash flow, and it set the foundation for our portfolio. Now, it was pretty nerve-wracking. And right after buying all those properties, when I would go to the grocery store, I was buying beans and cheese and tortillas, and that's what I was eating for groceries. But I love beans and cheese, so it worked out great, and I love real estate just as much. And these properties have provided a lot for us, and they'll provide a lot for you too. You have to take risks, you have to get uncomfortable, and really that's where all the growth comes from. I was making short-term sacrifices, and I got extremely uncomfortable not knowing where the next money was going to come from. But, now I'm not going to the grocery store and only buying beans and cheese. And actually, cheese was a luxury at that time. But, don't have to do that anymore. However, I love those moments, and hopefully I get to do that again, where my back's up against the wall, we're stretched thin, because I know that's where the biggest payoff comes from. It's not from being comfortable, it's from getting uncomfortable and taking big risks. One saying that we really live by is always go for broke. We don't go out and buy expensive things. We don't like to sit on a lot of cash. We like to invest, and be broke in cash, because when our money's out there working, that's when it really starts to grow exponentially. So now you know. These are the details of my first 5 investments. You can and you should be out there buying properties just like I did when I first got started. These first properties are the most important, and they're the ones that are going to set you up for success for the rest of your life. Find some deals, make some connections, and start adding value for other people. Start adding properties to your portfolio and reach a level of financial freedom that other people never do. Before you click away, I want to know if you've already started investing. I'm super curious to hear. Comment below with the last deal you got under contract. Just type flip, wholesale, buy and hold, whatever it was. And if you have a question, comment that down below too. I promise to respond to every single question and comment that we get. Thanks again for watching today. Do not forget to subscribe, and I can't wait to see you in the next video.